So today we're going to look at the real estate giant Signa, ironically, which is a European real estate company in broad strokes. Ironically, if we go to insolvency for Signa, that does weirdly create opportunities for the big private equity firms.
Yeah, you're really starting to see potential distress start to get to the surface. You have many entities tied to Signa that could face insolvency. You have Signa going around the world looking for investors to really shore up liquidity here. Some of the people, according to Bloomberg's most recent reporting, include Mubadala, Saudi Arabia's public investment fund, Elliott Management, classical distressed investor here. Now, a massive question, we've talked about it a lot on this program, is when does the clearing price start to set in for commercial real estate? And with giants like Signa starting to face these types of issues, you start to see pricing get to a place where investors really start to think about where they can start getting in at.
And as we work through this, as Signa faces this cash crunch, what are the near-term issues that they might start to face?
Well, first is that idea that they're looking to shore up about 600 million euros in immediate funding needs, as well as this issue here where this is really one of the potentially largest set of insolvencies in the sector since the global financial crisis. Danny, if Signa, then what else? Remember, Signa's buildings alone have a very interesting portfolio range here, from Berlin to New York City, including the Chrysler building in New York City, which is a very well-known building. It is very closely tied to the financial industry. And so if Signa, then who else? Begs the question. And to your point here, when investors are looking at real estate, yes, we talk so much about the United States, but the opportunities that are being presented in Europe are also starting to get really interesting. You know, I think back to a conversation, you just played the tape from Blackstone and Steve Schwartzman. We actually had the first conversation with Jonathan Gray right after Liz Truss stepped down. And it was at that point Blackstone said, and remember, this is right on the eve of them raising billions of dollars for a new property fund, that they were already looking at the UK back then. And so these opportunities are getting more and more pronounced as time goes on.
So where is that bid-ask spread? Like, what does that compression look like?
Still wide.
It's still really wide.
Okay. And remember, the other problem here is it's not just a question of leases. It's not just a question of buildings. You think about the story, for example, with Julius Baer, and the idea that Baer had many thousands of loans tied to, or millions worth of loans, rather, tied to the single client. And you have loans tied to these properties to the individuals themselves to think about how do you start to fix the problems that are associated with the holding companies as well as the buildings themselves. How do you think about it asset by asset and loan by loan? There are different parts of capital structures here to think about. But to your point here, a lot of people in the market would still say that clearing price has not been set to get into the loans themselves.
I mean, there's been a lot of cracks in this real estate market. I mean, you could argue is it cracks that are verging on crises or just cracks themselves. Sonali, does this show a type of real estate just beyond commercial real estate that has issues? Is it more things like retail? If, again, they're one of the co-owners of Selfridges in London, which during Black Friday was swamped, are there bigger problems among many different asset classes?
I'm glad you asked that because there is a frustration, particularly with the media, for saying all commercial real estate is in trouble, when really it is offices in certain cities in particular that are facing more problems than others, as well as big retail locations. The question of the future of a mall, for example, how long have we been talking about that story, Danny?
Long time.
But now you have a bigger problem with not just higher interest rates, but also the lenders themselves facing their own pressures, particularly with the regional banking system here in the United States.